Now, the next chapter which we are going to revise is duty drawback. Everyone over here now. Duty drawback, section number 74 and section number 75. Everyone over here. Duty drawback. What do you mean by duty drawback? You imported some goods and now you are going ahead and exporting the goods. The government goes ahead and says, because the destination of the goods is outside India, whatever duty you had paid, we will go ahead and give you the duty back, and hence it is known as duty drawback. Section number 74, duty drawback on export. So you are given a duty drawback on re-export of duty paid goods. You had gone ahead and imported this glass. When you imported, you paid some duty. When you go ahead and export it back, government will go ahead and give you the duty drawback under section number 74. Means what item you had imported, same item you go ahead and export, government gives you duty drawback under section number 74. Section number 74 has section number 74.1, which talks about you imported mobile phone. As it is, you exported the mobile phone without using it, then they are going ahead and telling section number 74.1 deals with that. Section number 74.2 deals with export after use. You went ahead and imported something, used it for some time, and then exported. The duty drawback will be little less, and that is told by export after use, section number 74 subsection 2. Section number 74 subsection 1, export as such. You imported something, exported as such without use. Always remember, you either export it as normal export, means cargo, through cargo, or baba, baggage, or you go ahead and export it as post. 98% of the duty will be given, returned to you. Duty drawback will be given. Always remember, here duty drawback is given of all duties which are there. All duties means even IGST, GST compensation cess, safeguard duty, all the duties which are there will be given, returned to you, which is 98% duty drawback will be given. But the condition is, sir, ACDC will go ahead and identify as goods imported. Means what you had imported, you are going ahead and exporting. He will go ahead and identify. First, then, secondly, goods entered for export within 2 years from the date of payment of duty on importation. You imported, you paid the duty. Within 2 years, you should get your let export order, or further extension can be given by CBIC. Always remember, in section number 74, there is no requirement to realize any foreign currency, and minimum value addition ka requirement is also not there. Okay, sir. Then section number 74.2 says, if you import something, used it for some time and then export, that is known as section number 74.2, export after use. And for export after use, there is a notification number 19 bar to 1965 which has been issued, where they have gone ahead and told, if you go ahead and re-export, you imported, used it, and then re-exported wearing apparels, clothes, etc., tea chest, or exposed cinematographic film, movies, etc., unexposed photographic film, paper, plates, except films, etc. In this scenario, after use, there is no duty drawback. For an example, you imported, sir, wearing apparels, or you imported movies, or sir, tea chest, etc. you imported, or these X-ray films you imported, now all these bones, etc. are drawn, and you are telling you want to re-export after use. These items pay no duty drawback is given at all. But remember always, if you imported wearing apparel, tea chest, cinematographic film, unexposed photographic film, X-ray films, etc. without use, if you go ahead and export as such, then 98% duty drawback is there. Be very careful in the exam. Okay, sir. Other than this item, if motor car is being exported by whom, sir? By individual or by a company or business. Means business entity, non-business entity. Always remember, you will fall in the second criteria, which says whatever import duty you paid, 4% reduction per quarter for the first year. Second year, 3% reduction for the per quarter or part thereof. Third year, 2.5% reduction per quarter or part thereof. Fourth year, 2% reduction per quarter or part thereof will be done, and the remaining amount will be given as duty drawback. However, duty drawback after 2 years is only given if the CBIC goes ahead and extends the time period. Sir, if motor car or goods are imported by an individual for personal use, then always remember, first year per quarter or part thereof, then 4%, second year 3%, third year 2.5%, and fourth year 2% per quarter or part thereof. in your exam, if you are going in and doing a calculation for which you are calculating duty drawback after 2 years, then please go ahead and write duty drawback after 2 years only if CBSE has gone ahead and extended the period. Okay, sir. Sir, if all other goods means motor car, and if goods are not imported by an individual for personal or private use. For an example, I imported a projector for my private use. I am an individual for my private use, then I will go ahead and fall in criteria number 2. But I imported a projector for my office use, then I will fall in all other goods, which is the third criteria, where they have gone ahead and directly told the DBK percentage based on your period of usage. Sir, if the period of usage is up to 3 months, then duty drawback 95%. If the period of usage is greater than 3 months up to 6 months, then 85%. If the period of usage is greater than 6 months up to 9 months, then Baba 75%. Greater than 9 months up to 12 months, then 70%. Greater than 12 months up to 15 months, 65. Greater than 15 up to 18, it is 60%. Greater than 18, you will not get any duty drawback. Be very careful. First they told up to 3 months 95%, then Baba 10% reduction 95 minus 10% 85, again 10% minus 75, again 5% minus then 70, again 5% minus then 65, again 5% minus then 60. So it is 951010555 and then 0. Yes, sir, we all got it. Baba, this is not my number also. This is not anyone's number also. Please don't dial this number. Okay, everyone, done, sir. 951010 reduction. 95 minus 10, then 555 reduction, and then Baba, it is 0. You will not get any duty drawback. Got it, sir? Let's go ahead. Now, section number 74 done. Section number 74 1. If you go ahead and import something, export as such, then 98%. If you go ahead and import something, use it and export for some item, no duty drawback like wearing apparel, teachers, cinematographic flame, X-ray plates, etc. after use. And sir, then it is motor car or individual. If he has gone ahead and imported something, then I have gone ahead and told you second criteria. Third criteria is all other goods will fall in third criteria, which is 95. Then 10 minus 10 minus 10, then minus 5 minus 5 minus 5, and then the last one is greater than 18 months. It is always 0, no duty drawback. Next, section number 75 goes ahead and talks about duty drawback on imported material used in the manufacture. For an example, I went ahead and imported some material. I went ahead and made one mobile phone, and mobile phone ka screen I had gone ahead and imported. Then whatever custom duty I had gone ahead and paid on the screen. Now, if I am going in and ahead, screen I had imported, but now I made a mobile phone. Some domestic goods are also used. Some goods are imported, and now they are going ahead and telling whatever custom duty you paid, you will be given a duty drawback. Now, whatever custom duties and duties you have gone ahead and paid will be given as duty drawback. So, for an example, all these items which I purchased to make the mobile phone domestically, that IGST which I paid, IGST I can go ahead and take the credit. In section number 75, IGST ka refund is not given. IGST ka duty drawback is not given. Only this, when you import whatever materials you have gone ahead and used, on that materials, whatever duties etc. you have paid, that will be given as duty drawback. Now, everyone over here. So it says DBK on imported material used in the manufacture of exported goods. I imported some material. This material I paid the duty. Now I went ahead and mixed it along with some domestic materials, used it and made one final product, and the final product is exported. Then they are going ahead and telling if you are a manufacturer, basically for a manufacturer, the duty drawback is given under section number 75. So it says goods imported, import duty paid, used in the manufacture of goods. Now a new product is there and the new product is exported. Section number 75 will come into picture. Section number 75 is allowed only when you go ahead and make an export as normal export, that is by filing a shipping bill, or you are doing as post. Baggage is not allowed in case of section number 75. No criteria of identification. Why, sir? What you have imported and what you are exporting are never same, and hence there is no value, there is no criteria for identification, no time limit for export because manufacturing might take time, and but government is telling value addition criteria is there. On imported goods, if you have spent $100, you have to go ahead and make a minimum value addition when you are going ahead and exporting, and forex realization is a must within the time limit as per FEMA. Now, section number 75 has to be read with Custom and Central Excise Duty Drawback Rule 2017. In this, sir, basically government is going ahead and telling for everyone. I can't sit and identify how much duty drawback these people should get because lakhs of exporters, lakhs of item exported. I can't sit and for every person individually determine how much duty drawback he will get. So government went ahead and told, I will go ahead and fix all industry rate. For example, a shirt ka exporter will get 10% duty drawback, whatever material he uses per shirt. Or government will go ahead and say per unit 10 rupees you will get whatever you do, whatever duty you have paid. So that is fixed amount which government goes ahead and fixes. Duty drawback allowed at percentage per prescribed percentage of the FOB or fixed rate per unit. Average, this is basically an average amount fixed by the government taking the industry ka data. Then the second one is rule number 6. Rule number 6 talks about brand rate. Sir, my all industry rate is not there. My item is a new item. For this industry rate only is not there. Then Baba government will go ahead and say if all industry rate is not there, then not fixed for a product, then you can go ahead and apply to the principal commissioner of custom or the commissioner of custom within how much time? Within 3 months of the late export order for the fixation of duty drawback. And sir, once you go ahead and apply, he will go ahead and fix the duty drawback. Now you applied, he will take time to fix the how much duty drawback you will get. Now in between you might need working capital and hence you can go ahead and say, sir, I am applying for duty drawback, but please provisionally go ahead and give me the duty drawback. On finalization, I'll pay the differential or you pay me the refund. Provisional duty drawback may be allowed. Next, sir, if all industry rate, I have gone ahead and suffered 100 rupees duty on this product, sir, please give me at least 80 rupees. If all industry rate is less than 80% also of the duty which you have suffered, go to the officer and tell him, sir, for me, fix a brand rate which is a special brand rate. If all industry rate is less than 80% of the actual taxes and duties on import which you have gone ahead and paid, exporter can apply to the principal commissioner or commissioner of custom within a period of 3 months for the fixation of the late export order for fixation of special brand rate. Now, when he is fixing the special brand rate, you might need money and hence you can go ahead and say, sir, please go ahead and you might see, you might not need money over here. Why? I am going ahead and exporting, sir. Please, provisionally, you go ahead and clear these goods and hence, provisionally, sir, you go ahead and send the goods. Sorry, I have gone ahead and already shipped the goods. I will tell, sir, shipping is already done. Please give me the duty drawback. I need working capital. So hence, in that scenario, provisional duty drawback may be provided. Sir, if I don't go ahead and reply, if I don't go ahead and apply within 3 months, then always remember belated application, that is extension of time limit under rule number 7 and 6 is also possible. You can go ahead and apply to the assistant commissioner or the deputy commissioner and 3 months ka further extension can be given by him. Means 3 months first of all. Now further 3 months ka time limit will be given, but there is a fees which is 1% of the FOB or rupees 1000 whichever is lower. Sir, I did not apply within 3 months of late export order or the extended 3 months ka time limit. Then they are telling principal commissioner or commissioner of custom may go ahead and give further 6 month ka extension where the fees is lower of 2% of the FOB or 2000 rupees. Okay, sir, point is clear. Rule number 4, government also has the power that government can go ahead and revise the all industry rate which is fixed under rule number 3. Basically because of inflation, etc. If government wants, slowly they can go ahead and means whenever they feel that the all industry rate has become old, then they can go ahead and gather the industry data and fix a new all industry rate also. Now, rule number 8 over here is value addition. Always remember when you imported the goods, if you have spent $100 and if government have gone ahead and told 20% value addition, you have to exceed the value addition, only then duty drawback will be given. No duty drawback if exported value of the goods. Always remember export value of the goods is less than the value of imported material used in the manufacturing. Everyone over here, you imported the goods, you have spent $100. When you made the final product and you exported it only for $80. Always remember, get lost from here. You will not go ahead and get any duty drawback because the export value of the imported material, say the export value of the goods is less, means the FOB over here, for an example, is only $80, but you have for imported material you have spent $100, then baba no duty drawback. Next, export value does not exceed such percentage of the value of the imported material used. So government have gone ahead and told, if you have gone ahead and spent on the imported material $100 for an example, at least 20%, if government says the value addition has to be there, then you have to go ahead and exceed the value addition. Means when you are going ahead and exporting, you should at least earn $121, means $120, you have to go ahead and exceed the value addition, only then you will be given duty drawback. They are going ahead and telling, see, export value does not exceed such percentage of the value of imported material, raw material used as notified by the central government on specified goods. If value addition criteria is not exceeded, you will not get any duty drawback. Sir, what is the upper limit of duty drawback? Maximum duty drawback, how much I can go ahead and get? For an example, everyone over here, you went ahead and exported an item $1,000 may, and government have gone ahead and told 10% is the duty drawback. You will get, okay, I'll go ahead and say 1,000 rupees. Okay, everyone? Yes, sir. Government told 10% duty drawback means 100 rupees ka duty drawback you will get. But for an example, these goods are sold in the market, Indian market, only for 150 rupees. Then sir, always remember Indian market value is 150. Then maximum duty drawback can be one third, which is 50 rupees, and hence whichever is lower, which is lower, 50 rupees, that will be given as duty drawback. See, maximum duty drawback one third of the market price of exported product. This exported product ka Indian market price is 150 rupees. 150 ka one third is 50 rupees. So you will not be given 100 rupees ka duty drawback. You will be given one third. That is the maximum duty drawback you will be given under section number 75. Got it, sir? Now, everyone over here, I have gone ahead and told about the differences. Basis, duty drawback under section number 74 and 75. When is section number 74 admissible? Imported goods are exported, sir, as such or after use, then section number 74 is applicable. Section number 75, imported goods are used in manufacturing goods which are exported. You imported raw material, manufactured the final product and exported, then section number 75 is applicable. Here in section number 74, you can export as normal cargo, post or baggage. But 75 may baggage is not the option. Sir, what is the time limit to export? 2 years from the date of payment. You should have got your late export order. But in case of section number 75, there is no time limit because it is about manufacturing, and manufacturing might take some time. Section number 74 may identity will be verified. What you have imported is what you are exporting. Section number 74 may identification verification is there. 75 may what you had imported, you will make a new product and hence identity can't be verified. Such criteria of identification is not there. Value addition criteria in 74 it is not there. 75 may value addition criteria is prescribed by the government and you have to exceed it so that you get duty drawback. 74 may forex realization is not there. 75 may forex realization is a must within the time limit as prescribed by FEMA. Now, a very important section, section number 75. Section number 75, always remember, is applicable in case of section number 74 also and 75 ka DBK also. Section number 75A is interest on DBK. Always remember, if you have gone ahead and applied and your DBK is not given within 1 month of the submission of claim, you will get interest at the rate of 6% from the date after the expiry of 1 month till the date of payment. For an example, you applied over here, 1 month got over here. Now, if you don't get from your application, if you don't get DBK within 1 month, then post 1 month, they will go ahead and give you interest at the rate of 6% per annum. Yes, sir, we got it. From the date after the expiry of 1 month till the date of payment. Sir, if they go ahead and give me a DBK, erroneously, sir, here DBK erroneously was given. Now, always remember, you were never supposed to get DBK, but you got it. Always remember, you are given 2 months ka time. 1 month, 2 months ka time. Return it. If you don't give within 2 months, they will go ahead and raise it. They will go ahead and then start recovery. Always remember one thing, everyone. See, if DBK was given erroneously to you, they will go ahead and give you a demand order. Okay, once they go ahead and give you a demand order, they will tell you, sir, give it to us within 2 months. If you don't give it to us within 2 months, we will go ahead and start recovery. And always from the date of erroneous refund till the day they go ahead and recover, you have to pay interest. Within 2 months, if you pay, there is no recovery which will happen, but interest will come. Even if you pay here, also interest has to be paid from here till here. But if you don't pay within 2 months, then they are telling recovery will start. And once the recovery is done, till the date of recovery, you'll have to go ahead and pay interest. If recovery done till here, you have to pay till here. If you recovery done till here, you have to go ahead and pay interest. See, if DBK is paid erroneously or becomes recoverable, then it shall be demanded. And if not paid within 2 months, means they will go ahead and give you a demand order. So DBK given erroneously, they came to know about it. Once they came to know about it, they will give you a demand order. Once they give you a demand order, you just have 2 months ka time. Please return it. Once you return, from the day it was paid, DBK was paid erroneously, till the date they have gone ahead and returned you, you have to pay interest. But from the date of demand order, if within 2 months, so for an example, I'll tell it like this. Sir, I was given a DBK erroneously over here. Okay? Once you are given DBK erroneously, then they will go ahead. They will give you a demand order. Once they give you a demand order, always remember you have 2 months ka time. If you give within 2 months, still from the day you have given DBK erroneously till the date you have gone ahead and paid it back, you have to pay interest. Interest has to be paid. But from the demand order, if within 2 months you don't pay, then they will also start recovery. And now when they recover, again same thing, recovery will start. So recovery plus interest has to be paid from here till here at the rate of 15%. Interest though has to be paid from the date of DBK erroneously given to you till the date of payment, whether without recovery or with recovery. So, sir, if not paid within 2 months, then recovery will start. Always remember interest at the rate 15% from the date of payment till the date of recovery. From the day they have paid you, if you paid over here, then till here. If they go ahead and recover, then till here you have to pay interest. Got it, sir? Next, section number 76 again is applicable. Section number 76 again is applicable for section number 74 and section number 75 both. It says no DBK shall be allowed if the market price of the goods is less than the DBK. For an example, I went ahead and imported a mobile phone. When I imported the mobile phone, I imported it for 10,000 rupees. Today, the market price of these goods, everyone listen, the market price of the mobile, because the mobile is very old, is only 2,000 rupees. I am thinking, I imported the mobile phone. Let's go ahead and export. As such, sir, this was not used. It is kept as such. It is exported. I will get 9,800 rupees ka duty drawback. No, Baba, no. Always remember, listen, they will not give you 98% ka DBK over here. See, no DBK allowed. They will not give you DBK only if the market price of the goods is less than the DBK. Everyone over here, market price is how much? 2,000 only. Duty drawback 9,800. Government will not give you any duty drawback. Get lost, government will say over here. Sir, or you went for a duty drawback and DBK is only 50 rupees. Sir, 50 rupees they will give you. Less than 50 rupees, get lost. Get lost. Okay, sir. No DBK if central government is of the opinion that goods are likely to be smuggled back. For an example, you were getting your goods into India, you were caught and you had to pay 10 lakh rupees ka duty. You were trying to smuggle and you were caught, you paid 10 lakh rupees ka duty. Then you went ahead and told the government, I am going to send these goods back from India outside India. Government, if the government has a doubt that you are going to take 98% DBK, which is 9.8 lakh, and later you will get the goods back into India by smuggling, then government will not go ahead and give you any duty drawback. Yes, sir, we are clear. Here we are done with our chapter of DBK, an important chapter, B graded chapter, 3 to 4 marks they go ahead and ask in the exam. Wherever I have gone ahead and placed question marks, those are the important areas. Other than that also, I believe I have gone ahead and covered everything over here. I'll close my chapter of duty drawback over here, everyone.